My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. If you want to make friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and put days like today into context. Call me, 1-800-743-CNBC. Tweet me, @Jim Cramer. Right, just when you think that some metric is in control of the market, it changes, at least for a moment. And the market immediately changes with it. That's how I feel about tomorrow night, when we get the results of the midterm elections, where the Republicans do seem likely to pick up seats. The prediction rocketed through the market all day. Sotto voce, of course, leading to some very nice gains. Dow surged 424 points. S&P jumped 0.96%. Even the NASDAQ, the lowly world NASDAQ, gained 0.85%. How big could this election be for the market? Look, it wouldn't shock me if the GOP takes both chambers of Congress, but it sure looks like they'll take the House. Given that Wall Street sees President Biden as anti-business, you can expect the market's going to be thrilled with Republican victory.
All aboard!
Plus, Wall Street always loves divided government because it means that Washington can't do anything.
They know nothing!
So what exactly does it mean for us? First, the good news for the bulls. The averages have rallied after every midterm from Election Day through June 30th of next year. It's happened in every period since 1930, according to some amazing work by our great friend Joe Terranova. The gains are almost always substantial, although the last 5 post-midterm runs have come in on the low side, roughly the high single digits. But 100%, that's a pretty darn good percentage. So let's give it that historically strong pattern. Now, I also think any change of either the House or the Senate will be regarded as a sign of things to come in what could be a critical presidential election in 2024. Now, that's a big deal for the stock market because Joe Biden is not a friend of the market. In fact, I've never seen a president in my life who cares less about stocks, something he even mentioned to me a couple decades ago when we were riding together on Amtrak to Washington. Personally, I think it's kind of admirable that Biden doesn't take his cue from the averages, but my opinion means nothing here. Wall Street hates it, especially in comparison to the last guy, who explicitly measures performance by the size of the gains in the stock market, something he pointed out on an almost daily basis. So you should indeed get a pop on Wednesday if the Republicans take it. What's the biggest winners going to be? Okay, first, oil and gas, simply the drillers or oil service plays, including Halliburton, which we own for the Travel Trust, which, of course, you can find out more by joining the club, the CNBC Investing Club, and I do wish you joined. And then, of course, there's SLB. That's the old Schlumberger. They rang the bell on Friday. Next up will be the oil and gas producers, different from the service companies, that need more pipelines to bring their product to market. Banks are also big winners because a GOP win means less regulation. The Biden administration is considered incredibly anti-bank, so you might want to buy the majors, J.P. Morgan, Bank of America, or Wells Fargo, the latter being a big position in the Travel Trust. These stocks have been moving up, up, up because of the Fed's increases in fund rates, but also in anticipation of big GOP victories tomorrow night. Finally, we can expect that the freeze of mergers would thaw immediately upon the election of a Republican president. Right now, the only deals we see are private equity firms taking down publicly traded companies. It's very rare that 2 publicly traded companies try to merge, and when they do, it's very hard for them to survive the gauntlet of Lena Khan from the FTC and Jonathan Kanter, the Assistant Attorney General in charge of antitrust for the Justice Department. However, and in many ways this is more important and not talked about at all, there is a bear case here, too. First, if we get a divided government, the non-elected executive agencies may really double down on the criticism of big businesses. That's especially true if they sense Biden's reelection might be in danger. For instance, I expect the FTC, as I just mentioned, to fight Kroger's attempt of acquisition of Albertsons, even as there's not much overlap, and the new Kroger would be all union, which you think would be good for Democrats, right? It's a big win. So the next 2 years could be incredibly negative for M&A. Not good for Goldman Sachs, even as it had some serious outperformance of late. These Fed officials care about what would happen to your paycheck if an anti-competitive deal is approved. You may not like that as a shareholder, but that is the law of the land. So go try to change the law if you want to. Second, I'd expect the Federal Energy Regulatory Commission, or FERC, to do everything in its power to stop any new pipelines the oil industry wants. They certainly have the power to do it. My one hope here is that if Biden wants to get reelected, he needs lower gas prices, and more pipeline capacity can make that happen. There's only so much oil he can release from the Strategic Petroleum Reserve. If he stops depleting it, I actually think gasoline prices would spike rather rapidly. Third, I could easily see an investigation of the banks for not passing on more of the profits they're making from investing in risk-free treasuries at a very high yield, but paying you much less for the deposits in your savings account. Now, the gains do seem unfair. They're kind of what do you call it, the collateral damage from the Fed's plan to slow down the economy. So you have to wonder if the president won't call for an examination of what you make by keeping your account with a bank. It's an incredibly unsophisticated way to look at the things, not rigorous at all, but a layup politically. Fourth, coal is currently a very important line item for the railroads. It's been a huge boost to the bottom line, especially for CSX, which helps export a great deal of this stuff worldwide. But the president's hatred of coal could lead to a tariff. And if he wants to escalate things with China, he could potentially ban the sale of any U.S. coal that might end up there. Hey, speaking of China, when Trump was president, he chose to be tough on China by slapping tariffs on all sorts of goods that we import from the PRC. Biden, on the other hand, has targeted the Chinese tech industry because it's an adjunct to their military, which has designs on Taiwan, where a gigantic percentage of the world's semiconductors are made. I bet we see a pop in the semis and semi-equipment makers if there's a Republican sweep, but that's going to be short-lived as the executive agencies keep ramping up sanctions. Now, the biggest issue, hopefully that will test the Terranova post-midterm thesis, is the funding of the debt. This is what a lot of people are talking about. Remember, the debt ceiling crisis from 2011, the last time the Republicans took over Congress with a Democratic president, could happen again. What a disaster. We might need to worry about the government defaulting on its debt, not because we can't afford it, but because our political institutions are a mess. Maybe we even get hit with some credit downgrades from the big rating agencies. Did it before. This is what I'm most worried about about divided government. The market took a 19% hit the last time we had this fiasco 11 years ago. I think it'll play havoc with the averages. But we came out of it, the last one, just fine. So I recommend being ready to buy, not sell, after the debt ceiling crisis gets resolved, recognizing that it'll really end up being Treasury theater. In the end, I think today's move was a knee-jerk presumption that a Republican victory tomorrow night will definitely lead to higher stock prices. It ignores the fact that there are executive agencies, and those agencies aren't particularly accountable to Congress. If anything, they might dig in their heels if they think it helps them going into 2024. Plus, it also ignores the possibility of another debt ceiling crisis. So the bottom line, if the market keeps running tomorrow in anticipation of Republican sweep, well, you need to be aware that we've already had a big move. And it might be, well, that may be all we're entitled to for now, unless rates go lower, which they're not, or earnings get better, which they haven't. Because there's a lot that stays the same even when Congress changes hands. Let's go to Shannon in South Carolina. Shannon.
Hey, Jim, we love you in South Carolina.
Oh, thank you. I like the barbecue in South Carolina. Fantastic. Fantastic barbecue.
Out of this world.
Yeah.
I'm asking you about Block, the artist formerly known as Square,
yes,
and a 3 to 5 year time horizon on that.
Well, I've got to tell you, that's a fintech company, and the fintech companies are still, even after this, incredibly overvalued because they're all competing with each other. Here's a $37 billion company, and maybe it should be a $20 billion company. There's no telling what it's worth because it doesn't make any money. So, and when it does make money, it's incredibly overvalued on the out years. Let's go to David in Pennsylvania. David.
Booyah, Jim. Shout out from the Philadelphia suburbs.
Absolutely. Absolutely. Go ahead.
Hoping to ride the Eagles wave all the way to February, the Super Bowl.
Well, we don't want to jinx them, but I'm with you. What's up?
I wanted to get your take on a couple of e-commerce stocks, specifically one, Shopify, specifically how it compares to its giant competitor, Amazon.
Okay, I think Shopify, like Etsy, are two survivors of this period. What they're valued at is hard. This one's valued at $34 billion, but it is the power behind so many small businesses that I think it is worth something, and if anything, it's worth more than what it is selling for. All right, if the market keeps running tomorrow in anticipation of Republican sweep, you need to be aware that we've already had a big move based exactly on that happening. Oh man, tonight, shoppers looking for a bargain head to the outlets because an investment in outlet REIT hanger presented bargain for home gamers? I'm checking in with the CEO. And how much worse could it get for big tech names after this year's tumble? We got a little bit of an exciting turn today. Well, let's check out the charts to see. And NiSource fell today after Investor Day. So are investors getting a buying opportunity in a regulated utility company that's been very consistent for many years? I'm getting the latest from the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.